Hello and welcome to the European Pen Briefing for Monday, December the 10th. This is Marios Hadjikyriakos, investment analyst at XM, and we're going to be looking at the latest developments in the financial markets today. Let's start with the US dollar, which fell on Friday and is extending those losses early on Monday after the US jobs report for November disappointed, with both non-farm payrolls and wages coming in a little short of expectations. So we saw the US currency tumble as investors pared back even more Fed rate hike bets, to the point where now not even half of a regular rate increase is priced in for 2019, after the one next week of course. The surprising thing was that US stocks actually closed much lower as well, even despite this dovish repricing of the Fed, which is usually positive for stocks and risky assets in general. The trigger may have been some comments from White House advisor and notorious China hawk Peter Navarro, who reminded everyone that tariffs against China will rise to 25% if a deal is not reached in 90 days. US markets are also set to open lower today after the top US trade official, Robert Lighthizer, echoed Navarro's tone over the weekend, saying that the 90 days are a hard deadline for China. Since Lighthizer is the one leading these negotiations, investors probably took his words as a signal that the US will not extend the truce beyond these 90 days, unless there is some clear progress on the big issues. On another note, reports that the White House Chief of Staff will step down and that China officially protested the arrest of Huawei's CFO are also casting a shadow. Turning to the UK, sterling opened with a negative gap today ahead of tomorrow's Brexit vote in Parliament, which is widely expected not to pass. There's also been some talk that more Brexiteers in May's government are planning to quit, which is not helping either. Today, GDP data for October are due out, but remember that Brexit is by far the most important variable for the pound right now. Finally, in energy markets, OPEC and its allies reached a deal on Friday to cut production, but oil prices were left little changed and near their lows for the year. The cut was only 1.2 million barrels per day, which was more or less in line with market expectations and therefore not really enough to push prices higher. The loonie, however, did surge on Friday after Canada's latest jobs data were much stronger than expected. Thank you very much and have a great day.